The Fed is on track to cut this week, but the Bank of Japan is expected to hold. Markets will keep a close eye on Donald Trump's meeting with Xi Jinping on Thursday, and there's fresh Australian inflation data this week. That's coming up in our 5 Things in 5 Minutes on Monday, October the 27th. And then in our deep dive interview, ANZ Senior China Strategist Zhaopeng Xing details where China plans to invest in its new 5-year plan and why that's important.
These future industries will provide sustained productivity to China and will help China to win in the tech war against the US.
But first, in 5 and 5 with ANZ, US inflation figures on Friday night were slightly softer than expected, but not enough to change expectations for 2 more Fed rate cuts this year, including one later this week. Here's ANZ Group Chief Economist Richard Yetzinger.
The headline and call were under expectations. I mean, the annual headline rate is at 3% and the call rate also at 3%, so still well away from the Fed's 2% target, but there's enough downside risks on the activity side coming through for the Fed to cut rates in October. And of course, the market will be glued to what the Fed says to calibrate its pricing for future easings.
In markets over the weekend, the S&P 500 closed up 0.8% and the Nasdaq ended up 1.2%. The yield on the US 10-year Treasury closed flat at 3.997%. West Texas oil futures fell 0.5% to $61.50 US a barrel. Gold fell 0.2% to $4,137 US an ounce. The US dollar index was flat, as was the Aussie dollar at 65.14 US cents and the Kiwi at 57.49 US cents. Number 2. The other big inflation number to watch this week is in Australia, where the Reserve Bank of Australia is in a different position to the Fed. Here's Richard again.
In contrast to the US Federal Reserve, where the CPI numbers seem to give the green light to an easing, in Australia we expect the CPI numbers to confirm the red light in the November meeting for the Reserve Bank. Some months ago we had expected the bank to go in November, but as we added up the inflation kind of components for the Q3 CPI, it just didn't seem like an easing was likely. We expect a trimmed mean quarterly outcome of 0.9 and a headline quarterly of 1.2. If you multiply either of those by 4 to annualize, you're quite a way away from the midpoint of the Reserve Bank's target band. So anything close to our expectation will be consistent with the Reserve Bank holding off moving rates, at least for the remainder of calendar 2025.
Number 3. Currency traders will also be watching the Fed closely this week, says ANZ Head of FX Research, Marja bin Zaman.
The dollar has broadly been firmer over the last couple of weeks since the US government shutdown has come through. Looking ahead, we think that dollar firmness is likely to remain in the near term. Of course, this week we do have the FOMC meeting, but Fed cuts are fully priced in for October and December meetings. So, if anything, any cautious communication from the Fed would likely be more supportive for the US dollar.
Number 4. The other big event this week is President Trump's scheduled meeting with China's Xi Jinping on Thursday to try to make progress on a trade deal between China and the United States. Here's Marja bin again.
The US-China trade tensions, this is a bilateral story. This is not US versus the rest of the world, which we saw in April. And at that point of time, we saw, of course, dollars sell off. This time it's US versus China. And at the margin, we don't think we're going to see a deep further escalation of this. We don't expect to see a fall in the USD as we saw in April.
Number 5. Japan reported CPI inflation results on Friday that were in line with market expectations. The main focus is on relations between the new Prime Minister, Sake Takaichi, and the Bank of Japan, which makes its rates decision on Thursday. Here's ANZ FX strategist Felix Ryan.
The Bank of Japan may want to see what some of the new policies from the new administration will be. So I think there'll be some need for caution there. Our view still is that even though you are seeing some hawkish dissenters in the Bodge Board, overall, the Bodge Board as a group will want to keep things pretty cautious going forward. So we still don't see any rate hikes until January of next year.
Felix Ryan there. Now, in our deep dive interview, ANZ Senior China Strategist Zhaopeng Xing has analysed the initial statement or communique from the China Communist Party's big meeting or plenum last week, which finalised China's next 5-year plan, and in particular, which areas of the economy it will focus on growing.
I think tech and consumption will play the big roles in the next 5 years because they will, tech is the supply side, consumption is the demand side. So rebalance between the demand side and the supply side will be very important to China. I think this first plenum points to rebalance the growth path for China.
So for those people who aren't familiar with how the 5-year plans work or what the plenums do, could you explain what sort of information comes out and how long it takes and why it's important to watch what comes out of these plenum communiques and information?
China usually makes the 5 years plan. So the last 5 years plans spans from 2021 to 2025. This 15th 5-year plan will span from 2026 to 2030. So usually, the 5 years plans initiated by the party, the China Communist Party. So the party suggests the targets and the policy measures for the 5 years plan, and the final version or final draft will be approved by the National People's Congress usually in the next year in March. So this first plenum discussed the suggestions to China's 15th 5-year plan. Communique is a statement from the party, but I think the detailed suggestions will come out in 1 or 2 weeks later, where may deliver over 50% of the contents. I think the final version may not have so much surprise, because we will see the information flow in the next 1 to 2 weeks will be rich. So we will finally know everything until March.
So what might we expect from the new 5-year plan around the emerging strategic industries that the authorities might focus attention on?
Compared with the 14th 5-year plan, the 15th 5-year plan, the industrial policy looks a little bit different. In the 14th 5-year plan, China mentioned the traditional sectors and also strategic emerging industries. So they have 2 categories. But in the 15th 5-year plan, China mentioned 3 categories: traditional, emerging, but also the future industries. China Technology Administration has proposed pilot projects before 2035 to expand the industrial policy to 8+9 plan from just 8 strategic emerging sectors. China has been so successful in these strategic emerging sectors, including both new energy and also new energy vehicles. But this is the past. I think China and the US has started to compete with each other in some new things. These new things will be the 9 future industries. I think the 15th 5-year plan will disclose the details, more details for these 9 future industries. The names may be so far are metaverse, brain computer interface, quantum information, robot, AI, biomanufacturing, future display, future network, and also the new energy storage. I think these future industries will provide sustained productivity to China and will help China to win in the tech war against the US. So they will be very important and also will have rich implication for both China's industrial policy and also the equity market.
Zhaopeng there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Monday, October the 27th. Catch you tomorrow with a deeper preview of Australia's third quarter inflation figures due on Wednesday. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.